What if I told you that Bitcoin could reach $1 million? Sounds like an exaggeration, madness, or are we witnessing the greatest asset repricing in history? In this video, you'll understand why billionaire investors, fund managers, and even former government officials believe this isn't just possible. It might be inevitable, and most importantly, what this means for you, someone who works, saves, invests, and wants to protect what they've built. Have you ever felt like your money loses value even when it's sitting in your account? Like the system is designed to keep you trapped, while a few get richer by playing by rules you don't even understand? Then this video is for you. Here, we go beyond the hype and headlines. We'll talk real economic fundamentals, honest forecasts, risks along the way, and most importantly, the moral and strategic value of understanding Bitcoin now, before the game changes for good. By the end of this video, you'll see Bitcoin with new eyes and maybe start to question everything you've been taught about money. Because the real question isn't if Bitcoin can reach 1 million, but what you're going to do if it does. Bitcoin was created with an immutable code that defines its maximum supply, 21 million units. There will never be more than that. Unlike traditional money, which can be printed in unlimited quantities by governments and central banks, Bitcoin follows mathematical rules, not political ones. This scarcity is reinforced by an event called the halving, which happens every 4 years. Each time a halving occurs, the reward miners receive for validating transaction blocks is cut in half. That means with each cycle, fewer bitcoins enter circulation until around the year 2140, when all 21 million will have been mined. It's like gold getting harder and harder to extract, but with mathematical precision. Meanwhile, currencies like the dollar and euro follow the opposite logic. In times of crisis, central banks print trillions out of thin air, devaluing the money you have in your account. That's why prices go up, the cost of living increases, and your purchasing power drops. Satoshi Nakamoto, the creator of Bitcoin, predicted this problem with precision. In his words, the central bank must be trusted not to debase the currency. But the history of fiat currencies is full of breaches of that trust. With Bitcoin, that trust isn't necessary because the rules are in the code. And unlike politicians, the code doesn't change its mind. While Bitcoin's supply is limited and predictable, demand is only growing, and fast. In recent years, we've seen an explosion of interest from companies, governments, and everyday people. MicroStrategy, for example, has purchased over 200,000 Bitcoins as a long-term wealth preservation strategy. Major funds like BlackRock, Fidelity, and ARK Invest have launched Bitcoin ETFs, making it easier for traditional investors to gain exposure to the asset. In 2021, El Salvador became the first country to adopt Bitcoin as legal tender, and other nations are watching closely. Meanwhile, millions of people around the world are setting up digital wallets to hold their own Satoshis. Today, there are over 200 million wallets with a positive balance, and that number keeps growing. And while all this momentum builds, the total number of Bitcoins remains locked at the same ceiling, 21 million. In other words, more people want to buy, and less Bitcoin is available every day. It's like the entire world is chasing a fixed number of Bitcoins, and there's less and less to go around. This is supply and demand on a collision course, and in this kind of collision, what explodes is the price. Some of the most respected minds in the investment world are making predictions that would have seemed outrageous just a few years ago. Larry Fink, CEO of BlackRock, suggests Bitcoin could reach $700,000 if sovereign wealth funds allocate just 2 to 5% of their assets to it. Michael Saylor, CEO of MicroStrategy, believes Bitcoin could reach $13 million over the next 21 years, aligned with its fixed supply dynamics. Cathie Wood of ARK Invest projects that Bitcoin could hit $1.5 million by 2030, driven by large-scale institutional adoption. According to her, once banks, funds, and corporations start allocating a portion of their portfolios to Bitcoin, today's price will look like a bargain. Balaji Srinivasan, former CTO of Coinbase, even made a public bet that Bitcoin could reach $1 million in just 90 days in the event of a rapid fiat system collapse. The prediction didn't materialize in time, but the message was clear. When confidence in traditional money vanishes, Bitcoin becomes the escape hatch. And then there's the creator of the stock-to-flow model, who projects Bitcoin surpassing the $1 million mark based on its relative scarcity compared to demand. Though controversial, the model has influenced thousands of investors around the world with its simple mathematical logic. Scarce assets tend to appreciate over time. Now think about this. If billion-dollar fund managers are betting on this, what do you know that they don't? Bitcoin isn't just a new form of money. It represents an ethical, philosophical, and even spiritual break from the current system. Bitcoin is not just money. It's a moral, spiritual, and technological revolution. At the heart of this revolution is the idea of individual freedom. Bitcoin allows anyone, anywhere in the world, to store and transfer value without asking permission from banks, governments, or corporations. Above all, it is a tool for peaceful disobedience, a silent, incorruptible way of saying no to a system built on debt, inflation, and control. Because the fiat system we live in works like this: you work, you get paid in a currency that loses value every year, you pay taxes on everything, and you still depend on institutions that can freeze or seize your assets. So tell me, do you really own your money, or do you just think you do? There are ways to try and understand where Bitcoin's price could go in the future. Two of the most well-known are the stock-to-flow model and Metcalfe's law. They're simple models, but they help illustrate why so many people believe today's Bitcoin price is just the beginning. Stock-to-flow analyzes the relationship between the total stock of an asset and how much is produced annually. The higher the ratio, the scarcer the asset, and in theory, the more valuable it becomes. With halvings reducing the issuance of new Bitcoins every 4 years, Bitcoin becomes increasingly scarce. The result? This model projects future cycles where Bitcoin could be worth over $1 million per coin. Metcalfe's law, on the other hand, states that the value of a network grows in proportion to the square of its number of users. In other words, the more people using Bitcoin, the more valuable it becomes. This helps explain why the rise in wallet creation and global adoption has such a strong impact on its price. Of course, no model is a guarantee. They don't predict the future with precision, but they help us understand the forces driving the price. And from that perspective, today's Bitcoin may just be a small fraction of what's coming. Today, the total market value of gold is around $13 trillion. If Bitcoin were to reach that level, each unit would be worth roughly $650,000, and that's considering just one asset class. But what if Bitcoin captured just 10% of the global government bond market, which totals over $130 trillion, or 10% of the real estate market, valued at over $300 trillion, not to mention central bank reserves, still mostly held in dollars and euros, which could begin shifting toward neutral, scarce assets like Bitcoin. These numbers show one thing: the ocean Bitcoin is swimming in is massive, and right now it's still a small fish among whales. If even a fraction of these markets starts moving into Bitcoin, the price impact would be massive, because unlike those markets, Bitcoin is limited, indivisible, and programmed to be scarce. Despite all its potential, Bitcoin's path is not without risks. One of the biggest is government regulation. States around the world are still trying to understand or control Bitcoin's impact. In some countries, it's encouraged. In others, it faces heavy restrictions, aggressive taxation, or outright bans. Another challenge comes from CBDCs, central bank digital currencies. Unlike Bitcoin, they're fully controlled by governments and can be used as tools of financial surveillance. While they don't offer the same guarantees of scarcity and freedom, they may still compete for public attention and adoption. There are also attacks on the broader narrative, like the collapse of FTX, scams involving unbacked crypto assets, and fraudulent projects. Many wave the Bitcoin flag to deceive, tarnish its image, and push new users away. But it's important to separate what Bitcoin truly is from all the noise surrounding it. None of this guarantees that Bitcoin will win. When people hear talk of Bitcoin at $1 million, the common reaction is, that's impossible. But it's crucial to understand something. $1 million today is not the same as 1 million in 2030. The number may be the same, but the purchasing power changes, and fast. With inflation eroding the value of fiat currencies year after year, what might happen isn't just that Bitcoin goes up, but that the dollar keeps melting down. The nominal price of Bitcoin could rise even if its real value stays the same. In that scenario, it's not Bitcoin getting more expensive, it's your money losing value. Jeff Booth, author of The Price of Tomorrow, puts this paradox into words. We are trying to solve inflation with more inflation. It's like trying to put out a fire with gasoline. And while that happens, Bitcoin, with its programmed scarcity, becomes more and more of a safe haven, not just because of what it's worth, but because of what it doesn't lose. Before we continue, please, if you are enjoying the video, give us a like and subscribe to the channel. Maybe the real question isn't whether Bitcoin will hit $1 million, but whether the dollar will still be worth anything. Because in a world where governments can print unlimited money, the problem isn't the price of Bitcoin. It's the real value of the currencies we use every day. Bitcoin isn't just a financial bet. It's an ethical stance. It's a way of saying, I choose a system based on unchangeable rules, not the whims of politicians or central bankers. It's about personal responsibility, sovereignty, and freedom. So think carefully, what if $1 million is actually the price of your freedom?